Hello, dear conference participants. We are doing this online presentation about SME and microloans in the environment of the coronavirus. And we think that we have a special role as an industry to enable the recovery. We are going to test this topic, whether it's true, what I just stated. And we have a group of speakers, international speakers, active in many markets, who can testify to that. So I think that without further ado, I will try to introduce my fellow panelists, and also we will jump to the discussion about the topics of today's panel. So first, I would like to introduce Jarkko Mäensivu, who is the CEO of Saldo Finance. It is a company that operates in the Nordics, primarily, I should say. And Jarkko is based in Finland, and he has spent a number of years in the financial sector, in the traditional industry, but now he is where he is in Saldo Finance. And after some time, I will give himself an opportunity to introduce how Saldo Finance is operating and what they are offering alternative into the finance market. The second international speaker is Reaves, CEO of Factris. Brian is also a seasoned expert in the finance industry, but also a serial entrepreneur. And I'm very happy to see Brian again. We've had Brian on the panel last year. This is an annual event continuing periodically, and I see that the community grows and involves the members for a long term. So the third panelist from the fintech industry is Audrius Griškevičius, whom I knew for many, many years in the traditional banking sector, and we spent a number of years doing projects together. And I'm very happy that Audrius, together with his fellow partners, established and developed the fintech company Finbee, which is now, I know from public sources, quite actively involved in the post-COVID recovery microfinance distribution. So I will be very interested to hear your experience here in this market where we are physically located. And last but not least, we have Kęstutis Motiejūnas, who is the CEO of the entity called Invega. It is the investment guarantee agency of Lithuania, which overnight during the COVID crisis became the main financial recovery administrator for the state. So Kęstutis is super busy at the moment. We can have an outlook of one country, but I'm pretty sure you have cooperation with many countries in the European Union, and you will have the possibility to share your experience, how your cooperation goes with the financial intermediaries, and especially the fintech companies that are the attendees and members of this conference. So without further ado, I would like to start with our international speakers here. And maybe, Jarkko, you could start by saying a few words about how you think the tools that your company had developed became relevant in the post-COVID recovery. And do you see your business growing? Is that an opportunity for you? How is this affecting your business?
Yes, so Saldo Finance, as we are a fintech lender, we've developed a fully digitized, automated SME lending onboarding where customer can apply for a loan and actually complete the full loan application instantly, fully digitized, including us to review all the financials, making sure we do all the proper AML KYC checks and full compliance as required, of course, in the SME lending space. And therefore, I do see that we will play a very important role in terms of getting the recovery back onto the track, because we can actually process hundreds of applications per day versus to a traditional bank who would perhaps do it more manually than we would do. So I do see a lot of opportunities in getting the fintechs more up to speed with the agencies like Invega in Lithuania, but equally what we are trying to do is work with the other agencies in Finland, in Sweden, to make sure that we would be part of these programs, these subsidized loans, and other ways to contribute to supporting the SMEs during the crisis.
And your company is doing that in how many markets? Do you see several
Currently,
markets?
we are active. Yes, so currently we're active in Finland and Sweden, and we are about to expand into Lithuania during Q3.
So you've been participating in the post-COVID recovery programs in your main markets, which is Sweden and Finland now?
Actually, no. I mean, there isn't the same kind of level of engagement as I see with Invega in Lithuania. So it is actually still mainly done by the traditional banks rather than the fintech lenders in terms of these plans. And that's why I'm very eager to hear the role of Invega and all the sort of inroads that has been done in Lithuania to hopefully try and then use that in our business to perhaps convince the agencies in the other countries to do similar kind of structures to support also those countries to make these inroads. And then hopefully when we enter into Lithuania, there's already a good solution in place, which we can then play a role in as well.
All right, we'll come back to you. Brian, can you share a little bit about Factris, what the business does and how it's been doing since last year, and what opportunities had it, gained during the post-COVID crisis?
Yeah, thank you very much. The Factris is a SME lender. We use receivables as collateral. And of course, we're also tech-enabled. So we onboard clients quickly. We service them fast with working capital. On the same day, they provide us with their invoices. And so our view in terms of the COVID-19 crisis is that a lot of businesses obviously took a hit. But when they come back into the market and when the market recovers, they're going to need working capital quickly in order to cover their market and market share. And so we intend to help these customers by providing them with immediate working capital to facilitate that growth on a month-by-month basis as they quickly recover from the crisis. Currently, Factris is in the Netherlands, Lithuania, and Latvia. We are expanding into other markets in Belgium and Germany. And unfortunately, for ourselves and our clients, we're just now closing a substantial working capital facility to enable that growth and to support our clients.
Have you seen the growth in the demand for the products that you have during the past few months?
I can give you a view. We in the Netherlands have already bounced back to the pre-COVID levels, and it's quite robust now in terms of our clients and in the way they're growing for the last couple of weeks. I would say in Latvia, we are also back to the pre-COVID level. In Lithuania, it's been a bit slower from a growth perspective because the success of Invega. We found out earlier, I was checking this week, and that 45 of our clients have actually taken advantage of the inexpensive capital that's been distributed. And so from that point of view, we've actually dropped about 20% of our loan book. And we obviously hope that will come back in the near future.
All right, we'll come back to you. So I'm turning now to the Lithuanian market, where indeed, I think what is admirable is that the government, in addition to just trying to help business quickly, actually tried to achieve another goal, that it would involve the modern and new ways of distributing aid involving fintech companies. So Audrius, tell us about Finbee and how Finbee got involved in the post-COVID aid distribution business, and what did it do to your business?
Well, you remember those times when we worked together during the previous crisis, and already at that time I understood that the banks probably are not the best tools to distribute capital during the crisis. And Finbee was, the idea of creating the Finbee from my side was to create this new and alternative channel, so that when the crisis comes, government has a distribution channel for this capital to be employed. Finbee is a fintech company that is 4 years old, and we started with the consumer lending, and 1 year later we started also with the SME lending. We have distributed around 20 million euros of capital, both to private individuals and SMEs. However, things have changed dramatically when this crisis came, because we were the first ones to sign the contract with the main product that Invega is offering for the businesses that are suffering from the COVID-19 aftermath. And so far we have distributed around 30 million. So what we have done during the 3 years period, we doubled that just in a few weeks' time. So yeah, that was a dramatic change for us.
So I can imagine your company was not laying off people, you were hiring.
Yeah, we are hiring big time.
Which is super nice to hear about the industry getting successful and being helpful. So Kęstutis, we'll turn to you. Can you give us some intel into how Lithuania has dealt with it? What inspired you to involve fintech? And what is your impression comparing the partnerships you have with the fintech companies with the traditional banks that you've been always working with other products that you had in the past?
Hello. So maybe shortly about Invega. However, I see that everybody knows who we are. So we are a national promotional institution or national promotional bank in other words. And our mission is to support the business in the field of financing and to provide the financing for the businesses, especially SME, in case the free market cannot effectively provide such finance. So, and of course, as Dovilė mentioned, over one night, Invega got involved in the huge project, let's say, and we got the task to establish and launch about 7, if no more, new instrument of the huge size, to do it in the very fast manner, very quickly, and to pull money to the market, to the businesses as soon as possible. And from the very first day of constructing of these new instruments, the plan was to involve as many players in the market as possible, and not to rely only on the traditional players in the financing market, like banks or credit institutions or leasing companies, but also to turn to alternative lenders, to crowdfunding platforms, to debt funds, which are already existing in Lithuania. And now I am calculating in my mind, and the funny fact that we actually did 5 instruments which are available for alternative market, and only 3 which are available to the banks. So it was idea from the very first day to construct the products in the way that we allow to participate the maximum potential players and to have maximum channels for distribution of the funds.
And so the impression, what the impression was that you got in the new partnerships that you formed overnight and over these several weeks, is that any different? You know how you deal with the fintech companies in comparison to what you do with the banks? I mean, in terms of the B2B relationship that you are in.
Well, actually, I have the very best impressions of the cooperation, and maybe it is natural that we noticed and we see now that the fintech companies are more hungry, more fast and more flexible than big banks, for example. Maybe it's natural from one side, but from another side, it's pleasure, and it proves that the turning to the alternative market was good idea. So the impressions are the best, really. Audrius and his colleagues in the market were very quick in everything, in response, in assigning the contracts, in preparing for the processes and administration of our instruments. So really best impressions. Of course, there were some surprises for us. We got known to the many names which were unfamiliar for us before the COVID period. So now we know all the alternative players in Lithuania and can say a lot about them.
Yeah, it is pleasing that, the partnership of government with business, and especially with the new types of businesses, is working, and it's really something that we don't have many opportunities to explore in this crisis. Some positives at least. I'm coming back a little bit to the way the fintechs do business. I'm gonna come back to Jarkko. Maybe do you think that the sort of model where you identify and analyze your clients using data and telecommunication tools, that was something that you needed as fintech company to push for? Now it has justified itself and it's there to stay, and it's something that gives more value to businesses like yours in comparison to traditional businesses?
Absolutely, I do, because if we look at the wider economy and we look at the requirements, how it's moving forward, the traditional banks, if we look at the rejection rates just in Lithuania for SMEs over the past couple of years, they've actually tripled. And the main reason is not because they've become more risk adverse, it's because the banks actually can choose to take on larger customers rather than the SMEs. And then if the processing of the application is still the same manual long process, and they don't have the scale to process hundreds of applications per day, of course they will choose the larger companies over the smaller ones. And then that's exactly where I believe we will come in, where for us it is fully instant, fully digitized. We will be able to take on the last year financials, but equally the interim financials, digitally evaluate that, evaluate also the personal financials of the people behind the company, even get access to the company account data if needed, and then perform full due diligence, full scenarios on the company. And then, of course, which is very important, do the full AMYC checks and reports out of the customers. But with that approach that we have, we can process almost as many applications per day as we just get in, and still do that in a very compliant regulatory way, just ensuring good risk management, good evaluation of the financials, and again, as I'm repeating myself, but the very strict protocols on how to lend and who to lend.
Brian, you mentioned you had received you're working on certain additional financing to expand your products now, and you also mentioned that you finance your companies in, financing their receivables. Obviously, with the economic situation, with the quarantine, there are so many unknowns. Did you adjust your business model and how you analyze risk, and how you think, well, this must be a big challenge in what you do? I mean, there's one thing to sort of be relevant and be the necessary player, but the other thing is to do it in a way that is sustainable. And so just give us some impression about, did you adapt your models and how did that go?
Well, I can say that last week we're celebrating 1 year without a fraud case across the group. And so we're very proud of that. But when it came to COVID-19, it was a completely different experience. I don't think anyone in our lifetime has ever seen something kind of economic carnage that happened so quickly, literally from 1 week to the next. Over the last 3 months, we revised our credit policy 3 times in terms of an interim checks to make sure that we're taking care of our capital and making sure that our clients are still stable. And it has been very resilient. We've noticed in our portfolios across the group that our invoice, for example, aging, has barely moved. And that we thought that maybe debtors would then pay later or otherwise, but strangely enough, it hasn't come into being. All of our debtors are actually hitting their financing targets, and things are working through the system. And so this is an unusual crisis in the way it developed. But we're finding that there's a bit more panic than there is in reality, at least in the sectors that we serve. Of course, if you're talking about event managers, travel, hospitality, all of these industries were clearly hit very hard. But we don't tend to service industries with receivables financing. And so from that standpoint, from our perspective, we've been pretty resilient in terms of the factoring, the construction industries, manufacturing, wholesale distribution, things like that have not been overly hit.
Jarkko, you have some reflections on that?
Yeah, I mean, we do share that vision, actually, also share the same view, actually. On our SME loan book, the way we look at it, due to, of course, the way we underwrite and the way we do the decisions and the scenarios, we actually haven't seen any deterioration during the COVID-19 crisis. So actually, the companies that we serve, they are still below the loss levels that we've actually budgeted originally. So it's not visible to us yet, at least the crisis in the markets that we serve. Of course, there might be differences between countries, but in Finland or Sweden, we don't really see an impact yet on that level. And therefore, we have, of course, done some tightenings in our risk evaluations, especially across certain industries or certain data points that we gather, and we see some reflections to the macroeconomic factors. But other than that, we haven't really gone to any hold or anything like that. And the performance still looks quite positive. And same actually is to be mentioned whilst we talk about SME, but same I can mention about our consumer lending book. It's exactly the same. There's hardly any impact on COVID-19.
I think that we should maybe try to reflect on, well, try to predict the future, but question to Audrius, do you think this shift from physical interactions in all industries across the board, whether it is, court hearings, government meetings, or consumer lending, will help the fintech industry or your company long term? What do you think about it?
Well, absolutely. We are digitally native. Everything what we do is only digital. So for those new customers that we onboarded, to experience this smooth process and interact with our brand is something that's gonna, of course, elevate us to a next level. Because I think that those customers that received the support in the most desired period of their probably company's life is something that is gonna bound us together for a very long time. And I also agree with the colleagues from other countries that in Lithuania we also seen that there were only minor increases in loans late payments. So majority of our portfolio is performing as it was before the crisis, and it's really unexpected for us as well. We'll see how it will evolve in future, but for us it's really performing well. And as I see that, we have as a country a perfect environment for the digital solutions, because we have these contracts in place, we have government that's openly sharing data, so it's easily accessible, it's basically for free. We have open banking APIs that gives us access to the most confidential data, and we can make pretty accurate decisions based on data that is held within the banks. So for the last 4 years, we've been training ourselves how to make accurate decisions based on data that banks are sitting on. And now with open banking APIs, we will be able to offer even faster and more accurate products to our customers to satisfy their needs. So the digital future is something that is gonna stay here.
That's good to hear. We have the same view in other markets where we are operating. Brian?
Yes, very much so. We see big data and access to data that we're getting from the various banking partners in the market and the various players is really helping us to enable make better decision making on the credit side, as well as credit assessment and what have you. And so from that perspective, we are using this data to help us to grow and refine our business and to help customers better and to help them make better decisions, more importantly.
What strikes me a little bit in this COVID situation is that a lot of the aid and the problem solving is quite national. So I think that is one thing that is going counter the fintech trend, where fintech is like, you can have a bank in your palm wherever the company is registered, it can function. It's just a matter of, licensing, and that's how Lithuania is involved in this whole industry. So I was wondering, maybe Kęstutis, you have had discussions with some other national agencies and more generally with the government, whether this is going to make the markets more fragmented because of the government involvement, or somehow, this will be floated into the market, maybe the portfolio that you are building now, because you are building now with the public money, and at some point, maybe it becomes marketable product. Do you have any discussions? I know you've been busy, but have you thought ahead, and is there any discussion long term in that direction?
Yeah, it's very hard to talk about the long-term plans these days, as we have a lot of job to do today, tomorrow, and yesterday. No, we didn't talk with other countries' institutions very much about that. But what should be noticed that the 8 programs of the countries, probably you will agree that they are pretty egoistic. And each country, not only in direct business support, but in the support of employees, in other areas of the country life, everything is pretty egoistic. So support of incoming tourism, for example, not outbound tourism, and etc. So this is, I don't know, good or bad, but the reality is that countries, even within EU, which is common market and common space, they are acted pretty egoistic and closed the borders, and all the support is oriented to the internal market, to the internal companies, to the people inside the country.
So do the cross-border fintech operators, do you see that as a tendency or a risk to your business, that, these kind of financing facilities that the government has created, they are national in their essence in terms of what they finance and how they are distributed and who are entitled to receive those? And do you think that is somehow, pushing you towards more adaptability to local markets, to be seen as a local player rather than, having one brand for the entire Europe, and as we did things before? Jarkko, you can go ahead.
Okay, thanks. Yeah, I mean, of course, if there was a EU-wide program which we could utilize to basically expand into those countries where we operate with the similar kind of solutions, the way I look at it, the structures, for example, not knowing exactly how the structure goes between Invega and Finbee, but for example, if there is a guarantee policy and then the fintechs could leverage that guarantee to get to grant loans to the SMEs, and then they can actually utilize low risk premiums as there is a governmental guarantee in place, partially or fully, for the loan. And then if that was a EU-wide initiative involving really the fintechs who have the capability for the open banking, for the instant credit decisioning, and of course the protocols in place for ML KYC, so it would be a chosen path. Of course, that would be one way to look at how the wider country organizations could, working together, get through this crisis better. And equally, if we look at the in-country decisions, as we just heard, Lithuania has taken a very aggressive and sort of progressive step forward in this. I believe Brian can correct if I'm wrong, but I saw something similar done in UK as well. But as I mentioned, Finland and Sweden, they have not taken this approach. They are still going largely through the traditional banks.
So, Brian, what's your impression about, the cross-border aspect of the fintech business and how the governments are all sort of making all national decisions and within national purposes?
Yeah, I mean, I love the European project myself, but it's European. It's all very national. In this crisis, it has exposed the fractures across Europe in terms of Factris. When we approached the Dutch authorities, it was really interesting that as a pan-European player, we weren't Dutch enough in some aspects. And so from that perspective, we need to strengthen the European project with European institutions and policies. And I believe it will come, but we're not there yet. And I think it has to come from both the political and the popular aspects of believing we're European before we are taking our national stances. But to come back to it, I'm positive. I think we're going to get there. It takes time. I mean, the European project itself is still at a relatively young stage, and it takes time.
I think I would turn back to the quasi-government representative here. Indeed, I think people are always criticizing the government, whether it's lending too little or whether it's too active in the business. So you'll never be good for everyone. But in fact, do you think the state will let go and sort of leave it to the market to take it over at some point? Or you think the abundant money that is available from ECB at the moment, if we're talking in the EU, will actually encourage Lithuania and other governments to step up and be more active, intervening the market with working capital being made available to small companies and consumers being helped and all other measures that we are implementing now?
I think that this COVID situation broke some psychological barriers in Lithuania. At least I feel so. What I mean that there are a lot of discussions already in different levels of the government and ministries about the such things like direct lending to the businesses by, for example, Invega or similar institutions and other instruments how to support businesses not only now in the particular COVID period, but also later. And looking from our institution's position, so really we're starting thinking a year before how to support alternative lending market and how to intervene into this market, maybe start investing somehow to provide lending resources to the market. But COVID came and kind of answered all the questions. So answer was very clear and fast. You should do that, and we did that. And I think and I hope that we will not stop. We will look for the ways how further provide funding for the alternative market. And we also are starting and will be lending ourselves directly to the businesses. So I think that, as I said, the many barriers are broken already.
Yeah, the balance will settle somewhere. So, Jarkko, maybe the same question to you. How do you feel? Did the situation that we're in today make your life in terms of attracting capital, whether it's equity capital or debt capital, easier or more difficult? And do you think there are some new categories of investors interested in fintech? Because, this conference is definitely involving the global fintech community and everybody's interested in hearing the aspect of access to capital. So how did it reflect on your business? And what do you think the future will be?
Yes, I mean, there are certain funds who are more interested in terms of the fintech capabilities, and especially about companies who can scale and who are more adaptable to the open banking and its opportunities, as we heard also earlier in this discussion. So the way we look at it at the moment, there is funding available for fintechs, whilst depending on what category, what sort of returns and risk premiums are out there, it might, whether it's affordable or not, is perhaps the biggest question. The way we look at it for our company, which is very solid, very stable, with a long profitable track record, we have no issue getting capital at the moment from traditional banks or elsewhere in an affordable rate to serve the SMEs in these distressed times, especially if there was a similar kind of structure than you are doing in Lithuania. If we could do the same thing in Finland with the counterpart here, of course, we would be ones to increase the funding into the SME loan market, because we can do that instantly. And as said, we can process the same amount of applications per day as a large bank with a, say, personnel of times 100 or 1,000 versus us.
Brian, do you have opportunities for your business being scaled, the ones that you've been looking at during the previous months? And, what are the barriers maybe that you think you have been able to remove or that will be removed for the scaling of fintech business in terms of capital and other resources?
I believe we are in a very good position. We were caught in the middle of an equity round and a debt raising when COVID hit, which delayed us a bit, but we're coming through the other side of it right now. And so we're well positioned over the next coming months to have at least available a lot of capital to deploy across our markets, and as well as to enter into new European markets. And we're quite excited about the future. I think it's coming fast, and we do also hope after the post-COVID period that we will go out and compete in the market with other competitors, and I think the governments will then recede a bit of some of the support that they've had, at least for direct lending to businesses, so that we can work with the governments in the region and work together to support businesses.
Do you think the consolidation activity in the fintech market will happen? It's quite fragmented now. There are a lot of very interesting, innovative, yet sometimes similar models being developed in various parts of the market. Do you think there will be more consolidation, given the fact that we are all doing business online now, and there will be more possibilities for brands to present themselves to their customers cross-border because everybody is more involved working online now? Audrius, do you have a reflection on that and for all the private players here?
I hope so, because in Lithuania the banking segment is highly concentrated, and therefore the businesses are suffering. While those alternative lenders, they're very fragile and they're small, and we need the scale to attract big capital, which is cheaper capital. For the moment, we're paying around 10% to our investors. And of course, this cost of capital lies on the shoulders of our borrowers. But if you look at the risk side, our default rates are even lower than the average of the banking industry. So it's obvious that everyone is overpaying because we're just too small player in the market. And consolidation, of course, would be one solution. Another one would be, of course, further support from the industry, with players like Invega, that could be this big player sharing the capital among smaller ones that is serving the SME segment. So, if there won't be there will be no Invega, there will be consolidation, definitely. But we'll see how it will play out.
Is that the same sentiment in the Nordics, Jarkko?
Absolutely. So there's been, of course, some views on consolidation happening and being required. So we definitely see there will be somewhat consolidation happening. And I do agree with what Audrius said, that if there wasn't a major lending package at the moment going on from both the Finnish and Swedish governments, that they are lending directly and they're giving even direct subsidies to the SMEs at the moment. If that was not happening, there would be much more need for the SME lending, and therefore there would be a need for the scale. And then that would mean that consolidations would be actually happening. Now they're happening more because of perhaps the issue, as Audrius referred, that the lending capability, due to the lack of funding or the cost of the funding, is actually being scarce a bit.
Brian, what is your comment on this topic, the consolidation of the market?
Yeah, I was a really big fan of M&A in terms of the consolidation of various alternative lenders to create a more of a pan-European player that would have the strength and scale in both financial resources, technology, and an overview of the market that could be really not comparable in the lending space. But from my perspective, I think right now it's going to be a challenge to see who's going to be the consolidator across Europe. There's quite a few large national champions, but you don't see them going cross-border, and sometimes you see them going cross-border and not doing too well. You've seen a few players that have, going out into the marketplace that have then are outside of their home markets that are then retreating after not being able to function in the local market. And I think this is not easy across the European market, simply because every country is different. It has different legal structures that you have to deal with, regulatory structures that you have to deal with. And until we see a bit more harmonization across the legal and regulatory framework, especially at the policy level, it's going to be a bit tricky to really have a pan-European vision and consolidation. Of course, within markets, yes, I see you can develop national champions, but unless you're a really big market, it's going to be a challenge to get scale.
Well, I believe that would be something for the large private equity to think about. Buying up those national champions, maybe creating European champion. We'll see. It's going to be interesting to see how this market develops further, obviously. We are running shortly out of time. I just wanted to ask if anybody who had a question to the other panelists or a comment that I didn't ask and you are burning to make. So, Audrius, you have something to say as a closing remark?
Yeah, I was wondering, because these guys from the TV on the other side had experience expanding to other countries. So I was wondering, if you could just define a few main lessons learned while going to different countries. So you were expecting something and you experienced something completely different, because we're also thinking about expansion to other countries. So it would be nice to hear, do's and don'ts that you have experienced.
Anyone who dares to comment first, welcome.
I think Brian more seasoned, so why don't I wait for your comment?
Thanks, Jarkko. Anytime you're going into an M&A transaction, you always have to take a lot of things into consideration in terms of your, scalability, the synergies, overlap, compatibility. I mean, in any business is a people business, so you have to look your partners in the eye and make sure that once you go through the dating process, that you really want to get married. In terms of the merger and the new deal that you're putting together. In terms of our personal experience thus far has been great. I think working with our Lithuanians has been a great experience. I think part of that was the lack of overlap, but it's also, I'm a big fan of the Baltics in terms of the energy and the drive that I've seen out of the market. And so that added a lot to our vision and to our business. Of course, there's always going to be the downside of that is always going to be teething problems, because you have to integrate products, you have to integrate technology, you have to have a clear roadmap, there's a lot of work involved, and structuring legal is always going to be different in different markets, as I mentioned earlier. But generally, a word to the wise is don't be in a hurry, evaluate, know what you want before you go in, find the right partner, and then once you get along well.
I think just before we end, 20 seconds, Jarkko, if you want to make a few comments, and we'll wrap it up from there.
Okay, I'll be very quick. So, Audrius, probably adding to what Brian said, it would be mainly about do your due diligence well. So, spend the time that is required to identify the market niche that you want to play into, identify the market dynamics that will work for you, identify your technology that you can really utilize there. And then how does the open banking or the APIs work in that country? How are the payments working and all that? I guess those have been the key things for us to find out. And then most importantly, as you do it for the first time, make sure you write a very detailed project book on what worked at what stage and what didn't. So when you do the third and fourth country, you'll actually have a playbook ready.
I think we ended up with an unexpected growth discussion, which is fantastic. I think to conclude, I would like to say that fintech is a good industry. It's a big industry. It's a growing industry. It has created itself opportunities during the crisis. It welcomed new players, that is the states, which is something to be seen, how the states are there to stay as an investor, as a competitor, as a consolidator. And definitely the cross-border aspect is an opportunity we have to tackle, and we've touched upon those things. Thank you very much for being with us here. And I hope everybody online who will be watching this panel discussion will have something to learn.
Thank you.
Thank you for having us.
Thank you.
Thank you very much for having me.